Hello, I'm Andy Brown. I'm the editor of International Construction magazine, and today I'm speaking to Chris Slight, who is the managing director of OffHighway Research. So the company recently released a report looking at global equipment sales, and Chris will be providing us with a bit more information about this. So thank you very much for joining us, Chris. How are you?
Yeah, thank you, Andy. Pleasure to be here.
Excellent, thank you. So if we could just kind of start then. So in your report, it says global construction equipment sales fell by 7% in 2022 from 2021. So is that figure kind of roughly in line with kind of what you guys expected?
Yeah, I would say so. It's I think probably have pity on the forecaster over the last 3 years because obviously since the COVID pandemic took hold of the world in 2020, we've had a lot of unknowns to try and understand. So yeah, I mean, I think the kind of the history of the pandemic and what happened in the market, yeah, last year's result was pretty much expected. What we saw in 2021 with very low interest rates around the world and a lot of stimulus spending was a pretty serious spike in global construction equipment sales. In 2021, the market grew 10%. In our measure of the market to almost 1.3 million machines sold. And that was by far the highest volumes that we've ever seen in the market. So when something like that happens, when it spikes so quickly, it can only really go one way the next year. So I think the 7% decline, yes, was more or less what we were forecasting in the 12 to 18 months running up to that. I think the point to make, though, is that when you dig into the details, the only market that fell in 2022 really was China. In China, you had the situation where you'd had extremely high sales in 2020 and 2021 because they're very quick out of the blocks with their stimulus spending. The markets really spiked for 2 years. And then not only did the stimulus spending get spent, but also last year, of course, you had a lot of turmoil in the Chinese real estate sector. And of course, all the difficulties that the country had in kind of coming out of COVID and all the additional lockdowns that you saw in major cities. So the Chinese market fell 40% last year from this very high level, down to below what we would consider to be normal. So on the global scale, it was China that caused the global downturn because it's such a big market. But if you take China out, the world excluding China actually grew 7% last year. And that was simply a function of, demand was still very, very hot, particularly for smaller equipment because house building around the world was running at a very high level because of low interest rates. And of course, we're talking about the market in unit terms. So when you look in unit terms, of course, compact machines are higher volume machines anyway. So that really drove the spike.
It's quite sort of extraordinary, is it, in a way that, as you say, if you take out China, the fact that the global equipment market kind of managed to grow kind of on the back of kind of what was a record year before that.
Yeah, exactly. I think, I mean, the other interesting thing about that is you're coming from 2020 where the only market that grew in 2020 really was China because of the stimulus spending. And of course, most other countries fell because of the effects of the pandemic and the lockdown. So you're kind of going from high-ish in 2019 to down sort of 10, 15% and then sort of picking back up. So when you take China out, you see a different pattern and you can kind of understand the reasons why. I think the thing that's very interesting about both 2021 and 2022 is any manufacturer you speak to or any dealer you speak to go, yeah, it was great, but we could have sold 5, 10, 15% more if only we had the machines to sell. So that really illustrates just how hot demand for equipment has been in the last 2.5 years, really.
Okay, great. So We kind of touched on kind of China there, but I kind of wonder if you could give us kind of an overview of some of the other kind of major markets and kind of how they performed in 2022, like kind of North America and Europe, perhaps.
Yeah, sure. I think you would probably say North America was the pick of the bunch. It most markets outside China obviously grew last year. I think the one that stands out is North America. The growth there was of the order of 10%. I don't have the exact figure to hand, and that took the market to really a record high level. And that growth was very much driven by compact equipment in North America. The compact track loader has become incredibly popular, and that was one area where we saw a lot of growth. And that was very much driven by house building. If you look at some of the data that comes out of North America on the value of residential building, the curve of the graph almost went vertical in 2020, and that drove a lot of equipment sales. So yeah, in terms of growth and volumes, North America was clearly the pick of the market. Going forward, we would expect obviously that to cool down this year as interest rates bite on the housing market. But the other very positive thing about North America is there's a lot of stimulus spending that was announced in the pandemic, which is now coming through. So we expect a bit of a pivot towards heavier equipment types. And, you know, it feels like that's happening, or that's certainly what we're hearing from the market. So in volume terms, of course, the North American market will come down. But in terms of the value of the equipment being sold, it will still be quite healthy this year. Europe was pretty strong last year. There was modest growth, I would say. It's about 2 or 3%. But again, that was coming from a very, very high level. You know, it's really very difficult for the European market to get much higher, I would say. Most of the markets in Northern Europe are either hitting record levels or pretty close to them. And then in Southern Europe, you're seeing very strong growth, particularly in Italy, which is a very big market, and that grew incredibly strongly last year. And also in Spain and Portugal and some of the smaller Mediterranean countries. So, I mean, yeah, in terms of percentage growth, Europe wasn't spectacular, but in terms of the volumes of equipment sold, yeah, very, very good on a historical level. The other market that we cover in detail, which I should probably touch on, is India. You know, long term, we're very bullish about India at Off-Highway Research. There's obviously a huge demand for infrastructure in that country, and the kind of the barriers and the frustrations around that are being removed, and the finances coming to market. But goodness knows there are a few hiccups and bumps in the roads in India. The last really good year was 2018. That was a record year. 2019 was an election year, and that does tend to make the market fall because there are a lot of things that disrupt construction. So the market fell in 2019, but at the end of the year it was looking really great. You know, the mood was fantastic. And then in 2020, of course, the pandemic struck. 2021 there were further waves, so it didn't really recover. It was starting to get there in early 22, but then inflation really hurt the market in India. So 2023, you know, we're very hopeful of some proper growth, and the signs are very good. There's the big Bauma Conexpo India trade show at the start of the year, and the mood there was fantastic. You know, so we're hoping for a good year this year. But then 2024 is an election year again, so it'll come down, and then long-term growth will resume. So yeah, I mean, India's a great market. You know, it will grow long term, but if you're in there, you've got the ups and downs to contend with.
Okay, perfect. Thank you, Chris. And I wonder, were there any kind of particular equipment types that kind of saw sales, you know, strongly increase in 2022?
It's I think year to year you don't particularly see a spike. I think you see these trends over the longer term. Having said that, I'm going to contradict myself. In North America, the compact track loader is, for a machine that almost didn't exist 20 years ago. It was only the late 90s and early 20s that the mainstream manufacturers really started launching these machines, although they'd been around from niche manufacturers before then. That sector has really built over the last 10 years or so. And yeah, in the last couple of years has turned into a huge high volume product in North America. North America is more or less the only place where those machines sell. It's about 95% of the global market is there. In other parts of the world, it's really excavators that have become the workhorse. Mostly sort of the larger crawler excavators. In our lexicon, that's machines of about 6 metric tons or more. In mature markets, demand for mini excavators has been very strong, and also in emerging markets as well. That sector, the long-term growth has outstripped what you see in the general market. But yes, the larger crawler excavators have really become the workhorse in many markets and replaced some other machine types. But having said that, it was a pretty good year last year for backhoe loaders as well. They're still very, very popular products in certain emerging markets, particularly Latin America, the Middle East and Africa. And of course, in India, the Indian market for backhoe loaders is bigger than the rest of the world put together. So it really matters what happens in India. So those emerging markets that have been strong and favour backhoe loaders have been very positive for that product type.
Okay, great, thank you. And you touched on it before a little bit in terms of kind of some of the, supply chain issues that some of the OEMs have had, and perhaps kind of shortage of components and kind of certain parts. Is that something that kind of you get the sense is still going to be a big issue kind of going forwards?
Yes, I think the worst of it has passed. Certainly in the last 6 months or so, speaking to people at the trade shows and conferences that have got back up and running now the pandemic has passed. What we're hearing is, it's not getting any worse. And the thing that has definitely improved a lot is the situation around shipping and logistics. But people still certainly have pain points around that. One of the big areas still continues to be semiconductors. And so that pops up in a lot of places on a construction machine, but the universal thing almost is the engine control unit. And in that type of semiconductor, the construction equipment market is also obviously competing with the on-road market as well, where the volumes are much higher. The market's a bit more consolidated, and there's a lot more buying power. So a lower volume sector like construction equipment gets pushed to the back of the queue a little bit. But it also relates to what's happening in global semiconductor production, which I'll cheerfully admit is outside my area of expertise. But the problem is that really no one is investing in the production capacity for that type of semiconductor, which is a mature technology and therefore quite an old one. People are investing in the cutting edge semiconductors that go into iPhones and the more whizzy things that have come along in the last 10 years. So that's a very roundabout way of saying we do not believe that supply chain issues will just evaporate now that we've kind of come out of the pandemic and now that volumes kind of come back to a more natural level. I think there's going to be a tension there for some time, really.
Okay, thank you. And kind of finally then, kind of what are kind of Off-Highway Research's expectations for kind of 2023 and maybe beyond, kind of regarding sales? And I'm sure you will do anyway, but if you could kind of touch on kind of China and kind of maybe to start off with, and kind of where you think the future might hold for that market.
Sure. At the global level, as we said at the start, the global market fell in 2022 by about 7%, and we would expect a similar sort of fall this year. In terms of the construction equipment market, that would class as a soft landing, I would say. It is a cyclical market, and normally you would see things either growing by 10% or falling by 10% or more. So if it's single digit, it's soft landing. And also bearing in mind, we're coming from such a high level. Even though the market fell 7% last year, it was the second highest volume that's ever been achieved. So even with another 5, 6, 7% fall this year, you're still at very, very good volumes. So yes, we do expect a soft landing, a certain pivot from the compact machines to the heavier equipment. We see infrastructure as being a pretty strong area, due primarily, or certainly helped by all the stimulus plans that were put in place 2 or 3 years ago, which are now turning into buckets, digging buckets full of earth. So I mean that's the general overall picture. As I said, although that doesn't look so great when you look at the market in overall volume terms, you're talking about much higher value equipment, probably higher margin equipment as well. So hopefully the manufacturers are feeling fairly buoyant about things. I think the other thing to say about 2023 is that we're still in a situation where there are quite long lead times and very big order backlogs in the industry. So that gives us a lot of confidence that, you know, almost no matter what happens in the world, the retail sales will be good because manufacturers are just fulfilling these orders that they've had on their books for many, many months. Obviously, the thing that we're going to be looking at is what's happening with the new order position, the order intake, and to what extent that will fill things up. Our view at the moment is that new orders are, you know, the order backlogs are shrinking because new orders are not replacing things at the same sort of level, but it's very much this thing of coming back to normal rather than, you know, anything anyone should panic about. But you know, things change. So for most markets, they're going to stay at a fairly high level, probably come down a bit, but still you would call them healthy markets, I would say. China is probably the exception to that. We had a big fall last year, as we discussed, and we're forecasting another modest decline this year. We think this year will be the bottom, and then things will start to pick up again. Obviously, the issue around COVID has now passed, and China has opened up, and you can travel to and from China again. The reason we're seeing another decline this year, however, is that the problems in the real estate sector will just take time to sort out. The bad debt situation will take time to sort out, and then it's a question of what happens with house prices, you know, before they sort of start growing again and people start building again. And real estate is a big consumer of construction equipment, of course. So we expect that to take another year or so to play out before the market there kind of dusts itself off and gets back to proper growth.
Okay, perfect. Well, thank you so much for your time, Chris. We really appreciate your insights.
Yeah, my pleasure. Thanks for having me, Andy.